What's going on, guys? This will be my trade breakdown for the two trades that I took on Friday. I was able to net almost $1,000 between the two, and I want to show you guys my logic behind both of these trades. So this is the hourly chart before NFE release, which happens at 8:30, and NFE is normally a two-stage event. So we had our all-time high marked, and we had our hourly low from yesterday at 2 o'clock. Um, if you play price, you can see what happens from the news release. We sweep all-time high, which is our buy-side liquidity pool, and then sweep our sell-side liquidity pool, reaching into this hourly fair value gap. And that's how you're able to refine the 4 hour to the 1 hour. And why this fair value gap and not this one? This is the first imbalance below this hourly swing low. That's why you want to be using this fair value gap. So, once I understood that we were bullish, price is going to sweep sell or buy side before sweeping sell side, and then after we get our area that we're bouncing from, that is where we look for a lower time frame change in the state of delivery, and that's how you're able to frame your trade setup. Also, this is a daily breaker right here. If you mark out the close of this candle, you can see where we're bouncing from as well. So that also gives you more, um, gives you a stronger narrative, right? So the 1 hour or the 15 minute is where I was able to frame my narrative for the trade that I took at 12 o'clock. Or I took it at 12:51. So you can see here is what's going on at the meantime. So there's 1 o'clock. So we still had data highs to be taken out on NQ. When you have the NFP move, normally this entire range will get filled, and one of the two indices will take out the high first. In this case, ES did. You can see right here, ES took out its all-time high from NFP at 10:45, and so this is why I was still bullish on NQ. You look at the 5 minute, we have our midnight opening price, and we have this down close candle here. And if you refine that even lower, you can see on the 4 minute there is a pull of sell side liquidity under here, which I was anticipating to get ran. And there's also an imbalance with this down close candle, and you can expect that to act as support. So once I saw that, and I saw the reaction after we got the sweep of this liquidity pool with midnight price, all I was looking for was this higher fair value gap to get inversed, and that's where I entered long on this inversion fair value gap, targeting this external range high with having this higher drawn liquidity up here, which is the NFP data high. So this is what my risk to reward looked like. I got filled right there, and my stop loss was at the bottom of this candle. I did not want to see this entire fair value gap down here get filled in, and so this was my trade setup. I had a 2-hour trade, and it's as simple as that. We aligned the higher time frame with the lower time frame, and that is how I was able to catch 27 handles. The next trade that I took was later on in the day, and I will have to play price to get there. It was a short, playing the continuation to the downside. So, why was I looking short after we took this high? Well, you can see that we came up, took this high up here, and we're refusing to displace over, and we're refusing to even have a candle body closure above this high. So when I see that, I'm anticipating a retracement to at least the 50% of this dealing range, if not a little bit even lower to this swing low. That is the first swing low in a discount. So on the 5 minute, this is what I was looking at. I saw that we completely displaced through this entire area, and we were tracing back up into this fair value gap up here. You can see on the 15-minute we're inside of this fair value gap. This is a breaker as well. These two large down close candles. I'm just going to use the bodies here. I'm going to mark out the middle point. You can see we're failing to close above, and if you refine that to the lower time frame, you can see where I'm anticipating price to draw to. So we get the sweep here of this first 5-minute low that we were looking at, and now we have two more equal lows down here with this failure swing here as well. So we're just engineering liquidity to the sell side of the curve. We have midnight, price fails to get above. If you look at ES, you can see the same exact kind of thing. ES gets a little bit deeper of retracement, gets inside of this down close candle here. I can mark that out. And you can see we're above midnight. If you refine that to the 5-minute time frame, you can see where we're rejecting from. And we're refusing to displace above this area. We're refusing to displace above midnight. So when I was looking for my entry, this is what I was looking for. We continue to sell off here. And this is where I got my fill to go short. So I was anticipating all of these highs to stay intact because I wanted to see this equal lows down here act as a draw on liquidity. And we had our higher time frame point of interest, which was these lows down here. And so this is what this trade setup looked like. We displaced through this area. We displaced through this fair value gap here. So I was anticipating this to act as an inversion as well with this fair value gap here and this order block to act as resistance. So I went short right here at the low of this wick, and my stop loss was above the mean threshold of this up close candle. So I can mark out the 50% of this candle, and I got filled here, and this is what the risk to reward looked like. I got filled right here. Stop loss was slightly above the mean threshold, and if I play price, you can see almost got stopped out, but that's why you use a stop loss above the mean threshold, and price delivered shortly after that. So I actually got filled right here. I wasn't targeting these lows just because these are suspect lows in my opinion. I wasn't expecting a clean delivery as well. We've been doing it all day, and these I like to use the previous candle low prior to that, or the candle body, and in this case I used these two lows down here that were in relative proximity to the 50% of this wick, and you can see where we're bouncing from. We were bounced from the 50% of the wick. 50% of the wick will give you a reaction most of the time unless you're in a really strong sell side or buy side delivery, but in this case I wasn't expecting the cleanest delivery, and it was closer to the end of the day as well. So you can see TP got hit right there, and I was out of my trade. And if I continue to play price, you can see what happens. Would have got stopped out at break even. Eventually, you can see that we're just kind of chopping around, and market closed. But that is where we're at, and these lows will be saved for later on in the week. But that is why I did not choose to take my profits at low of day, and let alone these lows, also because I only trade with one contract each trade. But I hope you guys found this insightful, and I'll see you in the next one.